Indians love their chicken tandoori and curry. Eggs also often find their way to the table for breakfast, lunch or dinner. That makes hatcheries a big business, and no one knows that better than Winkies India. It's one business where hatchery owners can usually pass on high raw material prices, but margins are better in the value-added products, namely ready to fry and heat and eat packets. So is that market growing for Winkies? Let's ask the joint MD, Mr. B. Venkatesh Rao. Mr. Rao, thanks very much for taking out the time. Let's, talk about each of the individual businesses and how have they been doing so far for you at Winkies?
Yeah, to start with, I think the rates were not so good of the broilers and the market was dull. But now suddenly it has been picking up lately. The glut situation is slowly moving away from the market, and you can see the rates improving in the broiler sector. Further processing, Venky's products like ETC products and the multinational supply, I think it is increasing. You can see that from 1700, 1500, 1700 something, 1400 something is going to 1700, 300 plus restaurants, quick service restaurants this year coming up, and different multinational American chains are coming in with. So the consumption is gone up by 6%, you can see in that segment. And of course, the SPF, also the production this year is going to go up by about 15%. The supply in various three sectors is going to increase. And, things like that, oil seeds, I think the Srirampur plant is coming up. So there you got a good capacity coming in. The oil seeds have been steady this year. Of course, the maize has been fluctuating so much. But yeah, this is what the current scenario is.
Let's talk about each of the segments for, eggs and poultry, animal healthcare and oil seeds. Each of these segments, where have you seen an incremental pickup in volumes that could have a positive bearing on realizations, and how much would that be?
And day-to-day, egg market was not, the production cost was again very high because of the maize content, and it was really touching even 3.5, 4 also rupees per egg. And now because of the maize coming in October end, which again, if the rains are again, I think they're becoming too much. So that's again becoming a question mark. But at least in this part of the country, so I would suggest that the production level will come down by 1-2% for egg industry. And broiler, of course, will be steady growth after the seasons which are getting over in the next 10-15 days. Navaratri and respected other festivals. So it is all season time to eat chicken, and winter coming up, winter setting up. Consumption is going to go up. Even in the in the further processing line, I think there's a steady growth. But in the fresh chicken market, it is a seasonal growth. Again, it depends on the glut market also. Okay, how your fellow mates are going to grow. Metrically, are they growing at 10%? If the industry grows in more than 10 to 12%, naturally there's going to be glut in the market. Though the per capita requirement is very high compared to other countries, but the marketing system still has to go way ahead of improvements. So this is what in short. Of course, the nutrition health value products, what Venkies is looking at is we are coming slowly at it. But the global market is, I think, about $25 billion, and India is just $1 billion, which we are growing at about 10 to Venky is growing at 10 to 20%, 10 to 15%. And some of the exciting products are there, of course, in that. The Whey Gain is there, and Intense Mask is there, and so Iron Man is there, and so many other things are there. Okay. Yes, please.
All right. Just talk about the margins, which have suffered a bit with regards to poultry. Animal health also, margins keep varying. You're facing competition from imports as well out there. And oil seeds also have shown a 200 basis points year-on-year decline due to lower realizations. Could you give us a ballpark as to what you expect margins to stack up at for all of these individual segments and on a consolidated basis as well?
Palm oil importation, and that is the pressure for the oil seeds, and particularly the rains are good, so nothing to worry there. But industry as such, I think it's very difficult to give anything because it's a livestock market, as I've been talking, and broiler particularly, it depends totally on this bumper crop which is coming up, and a little bit of hoarding will be there released, and it will be exciting next 3 months to look at if everything goes win-win situation, because the crop suddenly looks good, and though moisture content is there in the maize right now, But I'm sure that there will be a 10 to 12% of reduction cost. Though we are expecting the rates to be stable this next quarter for the broiler industry. The hatching eggs are also equally doing, I think they're picking up very slowly. Though the glut situation is still in the market, the heavy birds are there in the market, which has to be cleared. And then only you can see that if the rates are good, I've been talking this for a number of times, if the rates of the crop is good, if the rates are good, there is nothing going to do good because the market, if it is in a glut situation and the heavy birds are there, then it has to synchronize and gel right up to the customer level. So it is all win-win situation it should be. But I would say that bottom line, 10% growth we are maintaining, and we'll be maintaining and looking at that parameters.
All right. Could you give us an outlook in terms of price increases that you're looking to take on the back of higher maize prices?
I think whenever there's glut in the market, I think, and the maize prices are going above the production level, so it is naturally passed on to us. So there's nothing to see at that position. But yes, I'm looking at better prices in the industry if everybody cooperates, and even the agriculture farmers who suddenly see good prices in the season and try to produce more chicken, which is a good thing. But then we have to do marketing meticulously, which everybody talks about, because per capita, again I repeat, is a huge gap between the developed countries and we are a developing country. So there is a scope of another at least 2 decades to go to even compete with China, America.
What's Venky's plans for the product pipeline expansion and diversification, and also any plans with regards to whey protein?
Whey protein is, of course, we're growing in a very small sector, 10 to 20%, 10 to 15% in $1 billion business in India, and of course it's picking up good. And we have also had a small trial in Blackburn in our UK team. And everybody appreciated that, and the taste and the quality of the product. But products, and but particularly if you see SPF is a very interesting branch of us which is coming up. Internationally also the clients increasing, and the production level going 15% higher. Next year, 20%. Then we have got human supply vaccines which are never ending. Then we got poultry vaccine manufacturers also is never ending again. So I think it is 5 to 10% per annum increase in the SPF production. And of course, the overall Winkies, I would say 10 to 11% margins which we are looking at. It's very difficult to get into it because it will be a costing factor for various other products. But this is what we are looking at. And of course, the broiler and layer industry is 10 to 12% expansion per annum, which is has to go meticulously. A lot of competition. I think quality and service have to be the benchmark for the good product to be sold. That's what we believe. And I would even go ahead and tell our competitors about this.
All right, Mr. Rao, just one question with regards to the corporate tax cuts. How much of a benefit is that for you?
I would say it's a welcome move from our respected PM sir, and really appreciate that. And we have not come to the conclusion what the effects are going to be like, but I'm sure it is going to be a nice move by the government, and we appreciate that. And,
what is your current effective tax rate? Current effective tax rate for Venkies?
Venkies, I think it is. It has come down by, I think, 8%. What was that? 8% or something like that, or 7%. And I think it should affect us by about 35%. 35% with overall, and I think we take 7 or 8% in that.
All right. So indeed, a welcome move coming there from a corporate tax perspective as well. Mr. Rao, thank you so very much for joining us. Appreciate you taking out the time.
Thank you.
All right, this is management at Venky's. There are near-term pressures with regards to the raw material costs and the prices of maize surging, but they've been able to pass that on, so that's not much of a worry. Margins expected to hold on closer to about 11%. Moving on, delayed monsoon has dampened sentiments at fertilizer companies this year. For RCF, the state-run fertilizer maker, the first 2 quarters account for nearly 2/3 of the yearly revenue. But overall, fertilizer sales fell both in July and in August. To get an update on the sales in September, Yash Upadhyay had a chat with RCF's chairman and managing director, Mr. Umesh Dhattrak. Listen in.
So this year there was some uncertainty in monsoon. Initially it was delayed for some time, about almost a month, and then at some places it was more rain than expected. So excess and shortage both has happened, and that has affected the sales.
Okay.
Sales of fertilizer.
Okay.
So fertilizer is available in market. There is no scarcity of fertilizer. All sort of fertilizer, urea, NPK, DAP, everything is available. MOP. There is no shortage anywhere.
Okay. Also, there have been multiple reports from brokerages as well highlighting the fact that firstly we had the delayed monsoon, and then there were floods in a lot of parts of the country, which has impacted the sowing pattern across farmers and across different regions. Has that impacted your business by any sense, or have you been able to minimize that impact?
We are able to minimize that impact. Uncertainty of monsoon is every year in our country. It is part of our business. We are accustomed to it, and we try to get best out of it, best out of the situation by maximizing our sale in the given situation.
Then, sir, from that point of view, given the fact that the second quarter is a crucial quarter for the company and for the industry as a whole, for that matter, and the first 2 months having not gone as planned, how has the month of September been? Because there's a lot riding on it, and there's a lot of catch-up to do with respect to sales. And I know while the month is not completely over, there would have been certain targets that you would have had in mind in terms of sales and in terms of volumes. Have you been able to achieve those targets for the month or for the quarter as a whole?
Yes, almost. We almost achieved our targets. Some excess availability of fertilizer is there, particularly phosphatic fertilizer. We are managing with it, but RCF is able to sell its fertilizer. Whatever, our own NPK product we could sell, and we also imported NPK as well as the DAP, and we could sell both the imported products.
Sure. So that is as far as the demand scenario is concerned, but we have seen positive news coming as far as the input prices are concerned. The rock phosphate prices, the ammonia prices, they have moderated considerably. How are you reading of things over there?
Yeah, ammonia and rock phosphate prices, DAP prices are also coming down. So with that, the selling cost of fertilizer is coming down in the market. So fertilizer is being made available to farmers at much cheaper rate compared to initial in the season. Cost of fertilizer initially, what was available, has come down considerably.
Okay. So are you indicating that there have been any price cuts that you've taken, and if so, then what has been the quantum of those price cuts?
We have taken price cut. We have to sell our product along with others. There is a competition because of excess availability of fertilizer.
Sure. Another key element that dictates your operational performance is the power and fuel cost. And naturally, that has got a lot to do with how the domestic gas prices move, and they are dictated with how the international gas prices have moved. But unfortunately, due to global events, we have seen a bit of a spurt over there. Do you think because of that, your EBITDA margins may not see significant enough expansion despite of the fact that raw material prices have eased off?
You see, for urea, 80% cost comes from gas, that is energy. And for energy, the cost of gas is passed through in case of urea. So there is no impact of increase in domestic gas price for urea.
And in case of the other product categories?
There is a slight impact is there, which is absorbed in the market.
Sure. Now, in your annual report, you have highlighted the various expansion plans that you are looking at taking place. Even at the press conference, you mentioned a few of them. In fact, you gave a detailed account of all the various expansion plans that you have in place. Which are the top key initiatives that you are undertaking at RCF, and can you highlight them for us?
See, the expansion project, biggest expansion project for RCF is Talcher project, wherein 12.7 lakh metric ton of urea production is going to be there from coal, local culture coal. It is a gas-based, a coal-based project. Coal, indigenous coal will be gasified and then it will be used in ammonia plant for production of ammonia and then urea. So this project, estimated project cost is 13,277 crore with RCF equity 31.85%, and we have got joint venture partners GAIL and Coal India and land from FCL.
Okay, sure. And I believe there were a lot of other expansion plans as well. Not to go in depth with each of them, but how are you looking at funding these expansion plans? And most importantly, what is the sort of incremental benefit do you see coming in terms of your top line as well as your bottom line growth from these expansion projects?
First is, it is the big expansion of RCF after Thal project. Thal project was commissioned in 1984. Thereafter, there was no big expansion. And with this project, our top line and bottom line will improve, but it will take some time. Project completion time is 4 years, and thereafter we'll start getting returns.
Sure.
Initially, we'll have to invest.
Sure. One of the biggest measures that the government has announced, and it came out last weekend only in the form of the corporate trade tax cut that was announced. I believe, as for my understanding, your FY19 effective tax rate stood anywhere between 38.5% or 39%, and this is a big relief in terms of that. What other measures do you believe that the government needs to take in order to revitalize or kickstart the whole fertilizer sector?
See, fertilizer is a highly controlled sector. So we are highly depending on government policies for our profitability.
Sure. And so lastly, there have been multiple reports of the government planning to revive some of the old and remodernize some of the old fertilizer facilities and units. Any update with respect to that?
Yeah. Talcher is one of them. Talcher is one of the revival projects wherein RCF is nominated as an equity partner.
All right, that was the management of RCF talking about plans that the company has with regards to expansion, what the announcement of the finance minister does for their company. Stocks up about 3.5%, and it's been doing okay for itself in the last few trading sessions as well. I just want to quickly look at what's been happening on the indices. So we're down, I think, closer to the lowest point of the day for the Nifty as well as the Nifty Bank. 430 points under for the Nifty Bank, 29,754. For Nifty 50, that's 11,500. Just about holding out of those levels. Individual stocks, and just to quickly wrap them up for you, in the broader market space, while the mid-cap index is down closer to 0.5% plus, you do have a few stocks which are doing okay. Tata Communications last few days has been quite active. The stock today is also up about 5%. Then you've got IDBI Bank, 4.5% higher. In the last 1 month, IDBI has actually managed to move up quite significantly, closer to 44-45% in the last one month for IDBI Bank. Remember, they've got that additional, kicker coming in from the government as well, additional funding. You've got Diwan Housing, Reliance Capital, Strides Pharma, and ICICI Pru, which is up closer to 1.5%. So at this point in time, for the market standpoint, at least we're looking at a cut of closer to 0.75%. But with that, it's a wrap on today's edition of Indian Open. Up next, a lot more market action continues on the FNO show. Stay tuned.